All right, up, down, all around for the major averages ahead of the Fed. Steve Weiss, before we talk about Starbucks, what did you want to say?
Well, Joe's conflating two issues. He talks about the V-shaped recovery in the market when COVID hit. And yeah, that's true. But that wasn't the Fed's focus. The Fed wasn't hasty in moving. They said the economy is going to be hurting for a while, so they should have eased. And I said in my earlier comments, they're focused on the economy. Right now, they can give a damn about the markets. They only care about inflation and what it does to people, period. So that's where you got to focus, on demand destruction and what that does to multiples.
Well, sure. No, they want to get excess speculation out of the market, the kind of speculation that Joe was talking about. I mean, they don't care if the market goes down in that process. They don't want to destroy the stock market. Right. They don't want to just destroy all of that wealth. And that's in part what makes their act such a balance. It's so delicate. Totally get it.
Absolutely.
Let's talk Starbucks now. Rallying on the back of its earnings, one of our investment committee members actually just bought the stock, which has been in the penalty box big time. Stephanie Link joining us, I think on the podcast. Yeah, there you are. Hey, Steph. So why'd you jump in to Starbucks here?
Because I think it's really exciting here right now. I think you're at an inflection point. The stock is down 35% from July 21 highs, and I thought the quarter was actually really pretty good. You got to give Kevin Johnson, the former CEO, the credit, but Howard Schultz now can take that and run with it in terms of building momentum. The comps in the U.S. at 12% were super impressive, much better than expected, and that just speaks to the demand, right? And that speaks to that people want their products and still want their products. In China, not so much, down 23%. But we know China is actually going to reopen at some point. And then you have two things that I think are sort of interesting. They eliminated the buyback, the $20 billion buyback that they put in place. And now they have cash and money to actually invest in products, in people, in stores. And they're starting to do that. And I think they've got to do something in food, and I think they will. And then you have a catalyst. You have the Analyst Day in September, where I think that Howard Schultz will do a very good job in talking about how there's a lot of upside and opportunity for the company.
Just thinking about, prospects of a slowing economy. You mentioned China, right? Of course, China is going to reopen. We don't know when. And we don't know to what degree their economy is going to slow either. And then you have the union issue. It's just a lot in front of Howard Schultz, who's interim, by the way, to deal with.
Yep. But he's going to stay on the board, right? So even when they hire somebody new, that he'll still be involved very much. And the stock is down, as I mentioned, 35% from July 2021. That's a lot. A lot of bad news is in this stock. At 23 times forward estimates, the stock is at the low end of its historical range. So I started with a small position, and I'm just going to continue to add, because I do believe in their brand power, and I believe in Howard Schultz.
Joe, you used to own it, and you don't anymore. You just got fed up, I suppose, with the downdraft in the stock.
I did. The exit was a good one, and I've been watching it, waiting for an opportunity to get back in. I like Steph's strategy here. I think for me personally, I want a little bit more clarity on who ultimately is going to be the CEO, what at that September Investor Day the growth vision for this company is going to be. This is a much different company in 2022 than the company that Howard Schultz left in 2018. 75% of all of the orders are either mobile order, drive-through, or delivery. You have a younger customer base. So I think the vision towards the future is going to give me more clarity, and I'll probably enter the stock at that price. But I like what Steph's doing here, and I know the way Steph thinks about markets, and she's slowly going to be buying this stock for the remainder of the year, I would imagine.
Okay. Let's talk about another move you made, Steph. You no longer have any exposure at all to the semi space, which is pretty interesting. You sold Broadcom, and that was the last of it.
Yeah. And, I had sold NXPI and Lam Research. Both were very big positions for me at the beginning of the year. So I sold them, made some pretty good money over a 2-year time frame. Same with Broadcom, too. But I really do not like the action, the way AMD is trading. That was a phenomenal quarter. I mean, 71% total revenue growth, guiding 60% revenue growth because Xilinx is so much more synergistic to the company, but also underlying demand, especially in data center. I mean, there was nothing wrong, and the stock is up 2%. And this stock, by the way, is also down 44% from its high. So low expectations, and the stock can't rally. I am also a little bit concerned, and this is the bigger picture, and this is why I sold the other semis. I am a bit concerned about double and triple ordering because they can't, their customers can't get their stuff. So you're seeing that. And I think that's going to come home to roost at some point. Not right now, because supply chains are still a problem. But at some point, that's going to come back to roost. And I think that I don't want to be in these names, at least for now, in the next couple of months. We'll revisit if they pull back.
I mean, there is worry about PCs and strength in gaming and things like that. Your points are well taken. Steph, I appreciate it very much. That's Stephanie Link.